Global equity markets have experienced a historic pump yesterday following President Trump's unexpected or surprising decision to pause most tariffs for 90 days, with obviously the notable exception there being China. He took to Truth Social with this post: based on the lack of respect that China has shown to the world's markets, I'm hereby raising the tariff charged to China by the United States of America to 125% effective immediately. At some point, hopefully in the near future, China will realize that the days of ripping off the USA and other countries is no longer sustainable or acceptable. Conversely, based on the fact that more than 75 countries have called representatives of the United States, including Departments of Commerce, Treasury, and the USTR, to negotiate a solution to the subjects being discussed relative to trade barriers, tariffs, currency manipulation, and non-monetary tariffs, and that these countries have not, at my strong suggestion, retaliated in any way, shape, or form against the United States, I have authorized a 90-day pause and a substantially lowered reciprocal tariff during this period, which is the 10% base tariff that is now in effect for all other countries, with the exception of China. Markets have responded to that very, very strongly. S&P 500 has seen one of its strongest days, surged by 9.5%, which is typically how much the index makes on average per year. Dow Jones up 8%, Nasdaq up 12.2%. And linking to that, market enthusiasm, Treasury Secretary Scott Bessent provided further context, stating that this tariff pause was always planned. Like, this was a strategic move planned by the administration, and they have designed this entire approach to expose China for what they are and put them in a weaker spot when it comes to the future negotiations. Apart from that, and apart from the stock market move in the States, the rest of the world has also reacted to this pretty positively. Japan's Nikkei was up 9%. Major indices in Europe were up significantly as well. The German DAX, the French CAC were up 5%, but they also have started to correct down a bit from that high or from that pump, but they are still up very significantly. Also, looking at the fear and greed index, we've seen extreme fear both on the crypto side yesterday as well as on the CNN business fear, greed and fear index, which was down to 3 on the score from 0 to 100. That has recovered as well. Taking another look at the 10-year Treasury yield, which is something we have covered on the last shows, because with the uncertainty in the market, that had gone up as high as 4.75%. This has now also corrected down a bit. The 10-year yield is at 4.3%. And generally, the market is liking that relief very much, and is liking that 90-day pause. And that is also extending to Polymarket. Just want to check in on some of the bets which we very regularly took a look at. One being US going into a recession in 2025. That was almost up to 70%, went as high as 66%, has now corrected down significantly, is quote unquote only at a 50% chance. Inversely, however, with the uncertainty that had risen, the chances that we've seen a rate cut by the Fed in May were also up as well. Now that has corrected down, and 85% of the market are thinking that there's not going to be a rate change in May. Only 12% see a 25 bips change or decrease, and only 3% see a 50 bips decrease. And remember that 50 bips decrease was as high as 10% at the start of the week, when the market uncertainty was the highest.